Hello and welcome to Mint. Today, the market regulator Sebi, after 5 years, has come up with a consultative paper to revive the real estate investment trust in India. We have Anirudh Laskar with us, who has been tracking this development. So, Anirudh, compared to 2008 guidelines, what are the highlights of this paper?
Yes, the 2008 guidelines had issues related to valuation, taxation, and the allocations of assets under REITs. These were the three main issues in the 2008 guidelines. This time around, SEBI has tackled these three issues, and they're saying, for instance, when we, in terms of valuation, with regards to valuation, they are saying there has to be a principal valuer, there has to be an independent valuer, and all valuations would have to be done on the basis of these two independent valuation reports based on the average price. And along with that, they are also saying the rotation, the role of valuers will have to be rotated every 2 years. So this is all. This is to ensure that we have enough transparency when the rules are finally formalized. The taxation issues are not very clear. That we'll have to see how SEBI deals with it. And thirdly, SEBI seems to have followed the international practice on REITs. Like in most of the countries, REITs are allowed to invest only in projects which are complete and which have a sustainable source of income. SEBI has followed the same practice. SEBI will only allow to invest in those projects or properties which are completed and have a sustainable source of income. And along with that, to be extra sure that this time the proposal doesn't go futile, SEBI, to begin with, SEBI will only allow institutions and HNIs to invest in. At a later stage, when the market develops, SEBI will also allow retail investors. But we'll have to see how things pan out from here. And SEBI has given time till 31st October for public comments. Based on that, the final rules will be here.
Thanks for that input. It seems SEBI has done a thorough job when compared to last year. It has got more comprehensive when it comes to framing all these guidelines. Yeah. We have talked to a lot of investors and developers, and they are all happy that such a new mechanism is coming, because they are saying that it gives them investors an exit route, so that there will be more liquidity in the system, and developers will be able to finish their project on time. And as such, the office market at present is struggling, but the developers and experts, they are saying that in the future this will help more and more investors to come in, and this sector will get a lift. With that closing comment, if you have more updates, you can log on to livemint.com.